Hello and welcome to the CNBC TV18's Mumbai newsroom. I'm Sonal Bhutra and with me is Pavitra Parekh and you're watching Mutual Fund Corner. Pavitra, good afternoon. Well, we've been talking about mutual funds, what the industry is looking at, and we got the mutual fund data as well today. Today I thought let's just talk about real estate investment trusts because they are similar to mutual funds. There is an issue of units to the unit holders and the money is actually invested in commercial properties, at least in India that's the case. But of course, this has been an asset class which has underperformed in last 1 year. So that is something we'll discuss, and what are the returns, what are the investment avenues, all of it on the show today.
So that'll be really interesting, right? Because I mean, we don't talk about this space too much. So let's see, we have a guest joining us who is going to take us through all of our questions. Amit Bhagat is CEO and MD at ASK Property Fund, and he joins us now to answer all of our queries. Amit, good morning, good afternoon, and thanks for joining us, and a very happy new year to you. You know, like Sonal was pointing out, REITs have faced this kind of performance headwind, at least in the year gone by, right? Can you take us through what you think has really led to this, and how do you think REITs are likely to fare in the coming year, that's in 2023?
Good afternoon and thank you for having me on the show. Wish you a very happy new year. REITs have definitely been not performing to the expectation of the investor in the last 1 year. But if you look at the most important and the most critical reason why it has not been performing to this expectation of the investor is the increase in interest rates. And the REIT value is determined by the annual rental of the property, which is fixed for the entire year, or rather for 3 years, because rentals get re-rated in 3 years. Now, when interest rates go up, the rental is fixed, and the value of the unit, which is comprising of the REIT, which comprises of owning the properties which are rented out, it actually goes down because the yield is fixed for a short period. Then when the rentals are refixed and re-rated after 3 years, rentals go up, so the value of the REIT goes up. But when interest rates go up, the value of the REIT is subdued. When interest rates go down, the value of the REIT goes up. So interest rate has been one of the biggest reasons for REITs not performing to the expectation of the investor. Secondly, COVID and aftermath, if you look at it, vacancies have slightly gone up, especially in these special economic zones, because special economic zones do not have the facility of attracting tenants which can do domestic business, and that is pending because of the Desh bill. Once that development of enterprises and services hub bill is passed and domestic players are also allowed to operate in special economic zones, then the vacancies will actually reach the targeted level. Any REIT should have vacancy not exceeding 5 to 7%. Today, the vacancies are in the range of 15% approximately. And that is because of the special economic zones, work from home, hybrid model, which is continuing. And the biggest reason, which I specified in the beginning, is the interest rates. And because of all these reasons, REITs have not performed to the expectation of the investors. But to be fair to them, I think they have still returned 6 to 8% return, which is a very good fixed income product.
So, of course, we'll discuss that in greater detail as well, because that's the idea. What is the kind of return that we are seeing in REITs, and what is the outlook going forward as well? So, if you can tell us now, how big is the size of the Indian REIT industry? We did see some REIT issues by developers. What does the pipeline look like? Are we seeing a lot of interest in getting REITs to the market?
So, there are 3 listed REITs currently. 2 are owned by institutional foreign institutions and majority owned by foreign institutions. And 1 is owned by a developer backed by institutions. The total size of the REIT is around 62,000 odd crores. There are 2 to 3 REITs in the pipeline, one on the retail side, another on the commercial side. And we may also see a REIT by one of the largest developers of the country subsequently. So the size of this will increase. If you compare this to US market, US is far, far ahead of us. There are trillions of dollars of REIT there actually. And Indian market is very, very in nascent stages. So this market will definitely have more depth, more reach, and this is the only way to own a pie of the commercial real estate investors by the retail investor. So the outlook is positive because interest rates have gone up and we are at very high interest rates now, even as compared to COVID, I think we have crossed that level. Once interest rate starts going down and the economy continues to do well, as it is expected for Indian economy, then REITs will become a very preferred class for investors, both retail and institutional.
All right, that point is well taken. We are at a very early stage as far as the REITs investing situation really goes in India, especially when you compare it to other countries like the US. But Amit, the next question I want to ask you is, because we're at such, at a beginning stage as far as REITs go, do you think we'll see some interest in residential REITs as well? I mean, so far we've seen only commercial REITs. So do you see the residential REITs as a potential opportunity, or do you think that a majority of it will continue to come through only via the commercial real estate in India, I'm talking about?
So I don't see residential REITs coming into India in short or medium term. Long term, nobody has seen, so I can't predict. But having said that, the basic disconnect between India as a market and other markets, if you look at the commercial real estate rentals as a capital value. So if you buy an asset for 100 crores, the rental which you get annually is around 8 to 9% or 7 to 9%. Whereas in residential, if you buy assets of 100 crores, the rental yields are 2 to 3%. Whereas the cost of borrowing is 8 to 9%. 8 to 9 is the cost of home loan for individual buyer. And hence, even if an institution borrows, he may get a slightly cheaper, maybe at 8%, but the rental yields are 2 to 3%. So there is no positive arbitrage. If you buy an asset, a commercial real estate, the rental yields are 8 to 9%, the cost of fund is 7 to 8%. So there is a positive arbitrage. Here, the negative arbitrage is very huge. So I don't see residential REIT evolving in near future. Till we become a matured economy where supply of residential is so much that the cost of fund becomes very cheap and rental yields are at par or more than the cost of fund, till then residential REIT will not be a reality in India.
Okay, lower rental yield, that has been a big talking point for a long period of time, right? So let's talk about the income streams, because that's the reason why anybody would invest in REITs as well. Can you explain what are the returns one can expect once they actually invest in REITs, and what are the taxation on those returns as well?
So there are three ways to earn income on REIT. One is an interest income. So the REIT or the trust which is pooling the entire money and distributing units to the investors will invest in the underlying SPVs, which has commercial real estate projects. They will borrow and they will give interest income to the investors. They will give dividend income to the investor. And there is a capital appreciation on the units, which is capital gain, as and when the investor sells those units. So if you look at interest income is taxed in the hands of the investors at maximum marginal rate, whatever is the tax applicable to that investor, whether he's in a corporate or an individual. Dividend income is tax-free, provided the underlying companies from which the income is coming are following the taxation regime which was earlier and not the reduced taxation regime which was introduced for the corporates. So if you are a part of the earlier tax regime and you are not availing the reduced tax rates which were introduced by the subsequent budgets, in that case, the dividend being distributed is tax-free in the hands of the investor. It is a pass-through. And interest income is taxed as and when the rentals are re-rated or interest rate starts going down, the capital value of the unit will increase. And when you exit by selling those, you get a capital gain like any other equity product. So these are three streams of income. And all three incomes come to two incomes, which is interest and dividend comes to unit investors every year. And on exit, they get capital gain or capital loss, as the case may be, like any other equity product.
All right, I'm sure that will be very helpful to our viewers to really understand how the REITs and holdings in REITs are taxed. But you know, we were talking about the returns in the REITs, and ever since the time it has been introduced, can you take us through, because the REITs are basically taking a bet on the real estate space, right? So could you take us through how it's fared versus say real estate investments or directly investing in real estate stocks, just to draw a comparison?
So if you look at anyone who has subscribed to the initial IPOs of the REITs, they were benefited because if the initial price was say 300 rupees or 275 rupees, the current traded price of the REIT would be upward of 300. So that is a capital appreciation in the value of the units. At the same time, the interest and the dividend income has been in the range of 6 to 8%. And it is fulfilling two purposes. One, it is giving you the advantage of a fixed income as interest and dividend. More the dividend, it is better because it is tax-free in the hands of the investor. Interest is taxed like any other income, as I mentioned. And there is a capital appreciation because you subscribe to the initial product, IPO. If you have bought it from the market, then depending upon what was the value at that point of time, you will incur a profit or a loss. It is like any other equity product. So I think this is a wonderful product which has a fixed yield as well as a capital appreciation linked to the interest rates and resetting of the rentals and the occupancy or the vacancy levels in the REITs.
So in that case, who do you think, which investor should invest in REITs? Why should one prefer REITs versus a real estate stock and investing directly into real estate? You did mention some of the points, but if you can talk to us in greater detail about why should one prefer this asset versus the others?
So if you compare this to any equity market, I'll just digress for a second, then in that case, you will notice that in an equity market, investor can go and directly pick up equity stocks or go through the mutual fund. But for commercial real estate, because grade A asset is completely owned by either very large developers of this country, or it is owned by institutional investors or developers backed by institutional investors. So in this case, if the retail investor wants to participate in the commercial real estate rental yield plus capital appreciation, he has no choice but to go through REITs only. Because if he starts buying directly, one, his capacity to buy commercial real estate is limited by the fund size which he has. Secondly, he has all concentration risk because he will buy one asset in a particular location. Secondly, it may not be a grade A asset. Third, if you go into a REIT, you are buying a basket of grade A asset, which is owned by institutional investor who has excellent relationship with the tenants. And these tenants are very large Fortune 100 companies of the world, actually. And these tenants believe in, and they want service as upgradation of premises, upgradation of amenities, green buildings, hassle-free maintenance, seamless security. All this cannot be provided by individual investors. So if you go to the experts who are managing these facilities in top 3 or 5, growth centers, which are actually the job creation centers of the country. So if you look at current REITs, they own assets in Bangalore, Mumbai, NCR, Pune and Chennai. Whereas an individual investor, you can only buy direct real estate, and that too limited to the size you carry, and you will have a concentration risk. Whereas here you are participating in the grade A, best-in-class asset, which has best-in-class tenants, and these are grade A properties, compliant on ESG, green buildings, and they are continuously upgraded for the requirement of the tenant. Hence, the best way to participate is REIT only.
All right. Compelling argument there for investing in REITs. Amit, very interesting, but I request you to please stay on. We do have to take a mandatory break, but we'll be back in just 2 minutes and we have lots more questions lined up.
Welcome back. You're still tuned into Mutual Fund Corner on CNBC TV18. We still have with us Mr. Amit Bhagat of ASK Property Fund with us. He's answering all that we need to know about real estate investment trusts. Well, Amit, we have spoken a lot about, what are the returns, what are the income streams, what is the taxation. Can you tell us how can one invest in REITs? How many are available so far in India? And is it easy? Is it complex for an investor to go ahead and look at this asset component?
I think it's a very simple instrument for a paperless trading. If you have a demat account, you can buy a REIT through an IPO process or in the secondary market like any other equity product.
Okay.
There are 3 REITs currently available in India. As I mentioned earlier, 2 are owned by institutional investors and 1 is owned by a developer backed by institutional investor. There are 2 to 3 REITs which are likely to follow. One will be maybe a retail REIT, another will be backed by a very large developer of this country, another will be a combination of developers and institutional investors. The current size of the REIT available is almost 62,000 odd crores. It's the market cap of all 3 listed REITs. But this market will definitely widen because of the consolidation which has taken place in the commercial real estate market. Majority of the grade A assets are owned by 5-6 institutional investors and some large developers of this country. And hence, the only way to participate in this asset class through for availing the annual income and the growth will be to participate in a REIT only.
Okay. All right, Amit, thank you so much for joining us today and answering everything about REIT so patiently. So that's definitely a masterclass in REIT investing as well. And thanks a lot for joining us today.